Hello from the children of planet Earth. Hello from the children of planet Hello from the children of planet
What's up, everybody? Good morning. One second, guys.
Therapy.
What's up, everybody? Good morning. Get the music going on here. How's it going, everybody? Opening in 4 minutes here. How's it going? What's up, everybody? Good morning. Ty, J Hicks, Alexander, Beavis. Don't forget to hit the like button on stream before we get started. Give us a little love on the algo. Subscribe to the channel if you haven't already. We're live every single morning with all your favorite commentary, or maybe good market talk. Good stuff. All right, analyzing where we are. We're trading above triple B. No flags yet on index, all inside of the band. So we're open up nice and rational, at least today. No catalyst, no thing, no problem. VIX still in that kind of like iffy zone, so we need to make sure that we watch VIX trade below this 14.4 number. We'd be good for that. So somebody asked, monthly maps absolute mess. Yeah, it's showing that the markets are kind of like at this kind of standstill. We were thinking we might have a week or two of selling inside of the reading. The reading of the monthly map is a mess. Yeah, the market means the market's typically a little, directional. It's kind of showing somewhat liquid, showing possible selling inside of a bull market. Nasdaq here. Yes, my trading stuff ready. So the pre-market open, it looks like we're opening relatively flat, slightly down the S&P. Same thing in the Nasdaq. We'd have PMI coming up in 15 minutes. So we always have a little caution going into, this is the services PMI and global composite PMI for January. What do you want to do with your life? I want to rock it. I love that. I love when you guys say fun stuff like that. Cheers. Good morning. So you said what's going on with Ash and stuff. So now that the marketplace is coming out, everybody is going to have their own separate identity and separate place in the marketplace. That's kind of the whole thing, idea. Rocket Scooter's regular Discord is going to be focused justly on the platform. So anybody that's got like a room or community or something is going to have their own identity. So Ashton and I just have like a new arrangement of how that's going to happen. It's better to put his stuff in his Discord as we get bigger with the marketplace than have our Discord the way that it is now. So we're still working together. We're just days away from launching the beta version of the marketplace. So we're prepping for that. Well, it's really come down. Yeah, it certainly has. Okay, let's see. We got resilience opening slightly higher. Hey team, what's up? What's up? Okay, let's get that read. What we got? Spy here. It's here, ready to go. Res is decently positive, decently positive. Good morning, everybody. Get our reads in the morning. Let's see what we got here. Being relatively flat-ish. Hedge break, possible downside. Okay, it's fine. Keep my eyeball on this. So SPY is open mean reversion inside of here. Liquidity pockets and how this goes. So this is a pretty easy trading day. Let me show you this, guys. All right. So liquidity pocket, open in the middle, close in the middle. They tend to want to stay in the middle. It's going to be random from here. Anything that breaks here is definitely a bull breakout. If break only. You guys have seen this one before. Inside of here. So it looks like we're kind of like trapped inside of here. I'll take a breakout play only from here to there. Any break here. It's random in the middle. So no diddle in the middle. Easy peasy. Wait 15 minutes for the news to come out to give us a catalyst to go. VIX in a decay pattern, which is great. That can be assisting this triple B resistance. Living the tablet mate. Yeah, right. It's a little bit better. All right. So a no, kind of like a, not a big trading. Okay, guys, over here. Guys, help me out real quick. Do you mind going down to the bottom of the stream, clicking that thumbs up button, give us some love, and subscribe to the channel if you haven't. Can help us building up the channel again. We start training the Robbins Cup contest any moment now. Still waiting on that email to get it all set up. I just go through the account approval process and all that stuff. Get the money over. We'll be competing. Yes. Let's see, UVXY in a decay pattern. That's pretty good. So that's good for the non-volatile case. Hitting at the bottom of the box, trading from here to the middle. Do I want to take like 5 points? I don't know. Resiliences are negative, so we're outside the box. From here to here is that resistance, as a matter of fact. Let me go ahead and write this as well. So it looks like this could be a hard day to get any upside. Oops, that's not what I wanted to say. Resilience is less than 0. They have mode 2. So we have resistance. We have push to the middle here, resistance there, with res less than 0. Res greater than 0 goes to hedge pressure, but hedge pressure is under the box. So hold on 1 second. Are you guys hang tight? I'll be right back. Well, I'll be here. I'm just gonna mute my mic real quick. All right, I'll be right back, you guys. Hold on. Hold on, guys, taking a little bit of a. I'm in a meeting right now with my team, so I'm going to be here, but no camera, just for about like 10 more minutes. Almost back, you guys. Give me some one more minute. Still waiting. 2 more minutes till the data comes out. All right, guys, I'm back and I'm joking. Sitting out today for the moment. Hold on. All right, we are back. Looks like we had the data come out and the market's pulling back just a little tiny bit. Sorry for the delay. We had a meeting with our white label client. Going super smoothly. I'm super excited to let me read your comments here really quick. What do you want to do with your life? I want to rock it. Dun, 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 dun. Dude, I need to rewrite that song. I want to rock. Bam, 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 bam. I want to rock. But clearly it's I want to rock it. So let's get back to turning the camera back on. Sorry about that, you guys. Man, I got that just crawled out of bed look. One of my favorite looks I have, but clearly not rocking a I got up and combed my hair for you guys look. I'm glad I sat out on the long side here. Market's pulling back just a teeny little bit. These are the old red lines. Just gotta make sure we get this done and ready right here. Let's go ahead and mark some red lines here. We all knew today was the mean reversion. Didn't buy the long, then jump in on the dip. Don't you like we can use rocket scooter stuff to kind of like really come in here and have some risk management as part of our diet. To me, that's very important. All right. So we are building a trading platform. Part of our business is branched into, well, you know, we talk about our marketplace, you guys. So our marketplace has a lot of other things in it, as in not just Rocket Scooter, but other people's indicators and other people's tools, and also other people's versions of our platform. So we will build a custom platform for you. Just like Rocket Scooter, it's its own custom platform. So one of our things we do is we're building a platform for one of our clients, an A-list trader with one of the biggest trading communities on the planet. We are building their platform for them as well. So I had a little meeting. That's what I was doing. So apologize for that. That project's coming along really good, and their platform looks smoking hot. I won't lie. Long enough red line. No. We ain't doing nothing. No DD band break. And the question is, do we get float failure? NASDAQ and S&P will achieve float faster. I'm sorry, S&P will achieve float faster, I think, than NASDAQ will. So float failure would be hitting that DD band and turning around. The question is here, what's worth touching? All right, we already wrote this, how that mean reversion is going to be random. You guys like how this works? Anybody that's just new to this whole game, like resilience less than 0, mode 2, resilience less than 0. Market's random from the middle. Market played on the middle, randomly broke the other way on the news. Did not long. If broke only, long and blue. How cool is that? I'm not caught in a weird trap. Now the question is, do I want to take a small long bet on float failure? This little red line here. Why the hell not? The old scalpy scalp. Where would I trade to? Right back to bear zone. All right, let me clear the screen off really quick. So that's the first call out. The second call out today is we're going to play on flip. I just got a small, tiny little position. Let's try to find some pivots. Q's doesn't have any. We have 2 hedge breaks to the downside, so I'm playing very small. That's it. Try to get a scalp in the retracement to the upside. I think here's the downside movement. We have red line up here. So just basically playing on float failure that it does reverse in general and doesn't sell off and crash today. We have a red line right here at 49.5675. Put that guy red right there. VIX is on the top side of triple B. Eat that. Don't like it. No pivots on the downside on IWM. No pivots downside on Qs. It's D band, make or break. That's it. So just trading right in here to scoop it back up to there. Again, this is a scalp. This is the old red line. We're here in the upside movement. So this is the impact red line we created last time. Is that support? What do you guys think? Yeah, ask if we're longing off the red line here. That plus float together, I think it's going to be a good setup. If you guys don't understand what DD float is, let me show you really quick. DD float is a condition where I expect if this DD ratio is greater than half and markets are rational, I expect the market to kind of want to pivot away from the screen line as much as possible and not even touch it. If you do touch it, it's called float failure, which you've already experienced in the Russell. So you're going to see like this kind of almost like magnetic push where it's just going to get close to it and repel. It is something that's really, 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 really awesome. And look at this. I love that, you know, we have these kind of, I'll just draw the arrows like you normally, oh, hold on. I use my tablet. I'm so excited to draw. You guys will love this. There's your whole magnet here. Again, it's irrational market, so it's not going to be as strong of a push. If rational. But irrational, right? So it's not going to be as strong. Of a push. This is called float. Float. DD float. So we're betting on like just that hedging just turning on, kicking it away. Now we don't have the rational to give me all the confidence I want in this, but it's close enough. And how's the monthly looking at? Great question. Let's take a look. Ooh. Gotta love it, you guys. Monthly map is looking as solid and bullish as ever. This is great. Look at this monthly map, you guys. So the monthly map looks better today than it did on Friday. Much better. Let's read you guys what monthly maps are supposed to show. Let me hide that real quick. Take a picture here. Make a little art project for y'all. Monthly maps are looking very bullish still. I love that. Okay, let's get that out of the way. Let's put this back over here. Okay, let's get our little pencil out here. Let's do some drawing, you guys. Oh, let's make this bigger. Circle this. And let's circle this. That's double long. Long, long. Can't beat that. All right. Gotta love it, you guys. Gotta love it. Gotta love it. Oh wait, I forgot to say monthly maps on whatever it was. Monthly maps on SPY. Here we go. Here. Gotta love it. The maps are looking really clean. So what do you guys think about, let's look at NASDAQ as well under the same light. Monthly on Qs and down. Let's look at Qs. Q's looking just as good. Now with Q's, okay, so here's one thing looking at monthly maps. It's like you look at the, let's show you how this works. So if you guys look right here, you're looking at the bottom of the bull zone, which is the darker gray box. And the bottom of the bull zone is just continuing to slope down. That's a great sign. This means longs are becoming more long at the current price as time goes by. The bear side is top of the bear zone is also slipping down, which means the bears are becoming less short. So shorts are going to be covering as time goes by, and longs are going to be adding to their long as time goes by. And also the space between this is very non-existent. Like the space is what it's going to indicate volatility. And the volatile range for the week is not too terribly bad. It's showing, you know, what, 429 for Qs versus 420. That's not a lot. So it's even volatility is not expected to be there. Now, there's some volatility. This open pocket right here is going to be volatility leading into, you know, March. But until you know, middle of February, market's clean and probably still bullish. Let's look at Dow Jones. Dow Jones, similar boat, like more volatile now, less volatile as time goes by. So bulls are longing more, bears are exiting, and it's the same look across the board. So bull market's going to continue, dips are going to be bought, etc. Looking solid today. Playing the float failure trade, DD float. We wrote this right here. Irrational, being careful. So I'm in a very small position instead of a big position. Just going to play it, expecting some volatility. There's the red line we calculated today on the downside. Red line to red line trade, and a terrible idea. If I were to make a bet on what we do on float. We're going to be probably about open in mean reversion, likely close in mean reversion. So we'll do this like high a day. Right. Oops, let's go back here. So high of day. Yeah. Hedge pressure going to be high of day. Probably. Your bull zone area. I guess this is where the... Wait a minute. That's not where that is. There it is. We'll draw it just like that. That's about right. Okay, there we go. We'll leave it just like that. And bear zone would be here. And then bear zone is like, we'll just say like right here. And then we're going to likely to close in here. Let me not write that because we're irrational. But that's my target. We're not going to turn around and reverse past like the 75 and keep going. So what normally happens if you open here in this kind of like liquidity pocket, the best we hope for is that we close in here. We don't bet that we keep going. It'd be almost impossible to get here, break hedge, keep going. We all agree, right? That's a very rare instance that would happen. This is super rare. So we're inside of here. We're likely to at best return to here and just do something random from there. So any kind of trade, I'm not going to aim for anything higher than that. This is a day where I would personally, if I were trading options, sell calls up above here. Bet that we don't go there. If they're playing the 0-day game, I wouldn't be buying puts or calls or anything like that, but I'd be selling up in here. So we bet that where you open is likely where you close more often than not. In rational markets, irrational, it's hard to make that justification. But I'm going to bet that we don't continue to collapse today. With all signs looking great in the monthly map, looking stable, I'm going to go ahead and take the bet that float actually holds us and keep going. What's up? Netflix is pumping. Let's check it out. Netflix, baby. Pumping? Was that earlier? Yes, I know. You glad you like it? I don't love it. I don't like it. I might take it out on a date though. I like it enough to take it out on a date, but not like a dinner date, more like a coffee date, so I can get out quick. If it's catfishing me. He said Netflix was pumping. That might have been an older comment. Oh, that was from this morning. No liquidity pocket. How are you guys doing today? How was your weekend? Did anybody do anything fun? I went to Activate again yesterday, if you've never been to that. Activate is awesome. It's like Squid Games meets Dave and Buster's, I guess. Way to say it. You get these cool interactive games that you play. You just have to Google Activate if you've never seen it. If your city doesn't have one, you got to do it if you go to a city that has one. It's so fun. You worked at the ER all weekend? Ugh. Working all weekend is never the favorite. All right, so here's all the things we have brewing up right now. Rocket Scooter, platform, our stuff, number one. Number two, marketplace. Other people can sell their own tools. They can put their Discords, they can put all their other stuff, alert services, everything. We have white label products for all of them. Number three, you can white label our platform, some of our bots, some of our apps. We created all this stuff for vendors to use to make their own business kind of more streamlined in here. The marketplace will let you guys to search for anything related to the style of trading you like. Any more specific sense than just trying to Google. Our search engine is going to be very robust. You want to type in, I don't know, Forex, short-term, day trading, technical, Elliott wave strategies, and marketplace will kick you to the correct trade rooms that you're looking for. You know, risk management themed, quantitative, mathematical approach to trading. Boom, pop up. Options, order flow, techniques, pop up. So marketplace can be a huge deal. People can code indicators inside of our platform and sell them on the marketplace. People can create entire scanner settings, and that can be a product of the marketplace. People create their own alerts. That can be a product of the marketplace. People create their own text visual alerts, which would be like liquidity map arrows and things like that. People can get their own call out alerts, like I bought Apple at $2.50 or whatever, $250 a share. And then user platform can get the notification. All their clients get that notification inside the platform, things like that. So all that will be present in our marketplace. And then lastly, we have white label. So you can build your own Rocket Scooter version platform for your own company branding, which we have 2 current white label client building platforms for. Just remember, 2 years ago, we were just a YouTube stream with an app. And as we build and build and build, the entire community comes to us and says, you know, hey, this would be cool if you had this, or this would be cool if you had that, or hey, it'd be cool if we had this, or we had that. And then we just evolved. Now we're this community leader. And we have the ability to create things that everybody wants. And that's very exciting to me because as a trader, imagine 10 years ago, you want to get into trading. Where are you going to go? Like when I started, right, in 2010, I want to learn trading. You know what I did? There weren't YouTube streamers. There weren't video game streamers in 2010. There weren't streamers of any kind. You can go to YouTube, maybe find some trading videos. They were kind of, whatever. You certainly can go to TikTok and find, 14-year-olds driving Lambos talking about their day trading lives. You didn't have that 10 years ago. You had Barnes and Noble and like trading for dummies. Like you had the book section. You can go get books, how to day trade, or books about markets or whatever. And there's just this whole slew of stuff. I'm going to tell you, I read practically nothing. I think I actually bought a Trading for Dummies. I always call it Trading for Dummies. I always bought some like intro to trading kind of book. I bought a couple books, skimmed through them, and I was like, there was one I really liked. And of course, this is before I knew any better. This book was this guy. It was like my secret for making millions of dollars in the stock market. Some like rando trader guy who worked for a bank and then he quit. And then he started his own like style that made him a whole lot of money. And I was flipping through it at the store and I was like, oh, this is a neat technique. He was trading, and the punchline of the story is that this book was written in the 90s. So let's kind of like think about that. And I didn't know anything, right? So clearly whatever he did is completely obsolete, right? People will write the book on what they did when it no longer works. If it works, you're going to write the book and tell people how it works. Until it doesn't work anymore. So that's like rule number 1. If there's a book about it, it probably doesn't work. Like the reveal all. It's not the reveal all and go home and mimic this technique. But I was like, ooh, I can learn something about trading. So I bought the book, went home and read it. It was like a storybook about what this guy did. And what this guy did was he would take like a very liquid stock in the 90s. There's a heavy bid and a heavy ask. And this was when stocks were still traded on eighths of a dollar instead of pennies, right? The denomination, the precision at which you can trade was an eighth of a dollar. So he would scalp by buying at the bid, putting an order at the bid and an order at the ask on stocks that didn't move and just put a lot of money there. And the market would bounce between his bid and ask. And he's basically providing liquidity across a eighth of a dollar spread and making money. He was essentially market making on his own. And just every time he make the trade, he would get paid $12.50. And I was like, oh, that's a brilliant idea. It behoove you to know that when I log into my platform, I was like, where's the eighths of a dollar? I don't see this anymore. Looks like all of my stocks are trading in pennies. I don't get it. So the funny part is my very first day in the trading world was discovering that what was written in the book didn't match what I could see in my platform. And then immediately made me realize, I'm like, what is this eighths of a dollar thing? And then I Googled it and I realized, you know what? I just learned something today. The trading books are useless and they become outdated very quickly. So guy's strategy is not really a strategy. It's more just like a strategy for idiot suckers to go in and buy a book and him make a little extra money after that goes away. Because clearly you could do the same thing if you want to now, but you're providing liquidity on a penny for most things. And the market's going to just trample all over you. You're not going to be able to buffer. He's trading stocks that didn't move, right? You're not gonna be able to prevent us. And he would put in enough money to keep them from moving too. Like he'd find like these aren't traded that much. And this is the day for everybody's day trading, right? So you didn't have a lot of traders touching a lot of these stocks. And it was easy for him to be that buffer in case he got filled, in case something did get traded that he was on. You couldn't do anything like that at all these days. Everything's got enough activity that you can buffer one single stock and keep it from moving. But learning that day was, oh wow, this is interesting that the stock market has evolved so much since this book was written. You know, decimalization of markets came out in like 2003. You know, stocks moved away from that system to the new system. Now you have electronic market makers. All the open outcry pits closed down. You know, all like, so if you went back in 2008, 2009, because if you think about it right now, a lot of you guys started trading in 2020. Let's get a raise of hands. If you got started trading in 2020, COVID happened, market crashed. You're like, ooh, let me get in on this trading thing. Let me buy the dip and play the trading game. How many of you, that's when you got started, right? This kind of thing that happens in trading is that when markets collapse out, traders are born. We know this in this business. Part of your understanding of like being in the space is to understand how the business works. So a lot of you guys got started in what I call the COVID era. I'm the same as you. We are the same, except I jumped in on the gimmick of trading after the last recession. It's a gimmick. Markets are crashed. Your friends are like, you know what? I should put money in the stock market. I mean, it's only got to go up from here, right? And then you go, oh yeah, let me do that too. But you sound like an idiot. Let me actually learn how to trade. And I'll do the same thing you're doing, but I'll know better because I'll learn a little bit more. And we all did that. 2010, the market had crashed a couple years prior and was now inching its way back up. And I'm like, let me get on this trading game here. This sounds like a good idea. You can use it float. Or you can use a DD. You can use a DD. This is the pivot if there is one. Keep an eye out here. This thing can get really nasty really quick. This can get really nasty really quick. There's float failure now at play. So float failure is bad. It's not good. This is why we only trade small here. Nothing big. Look, couple $100. Nothing big. We know better. Papa Bear doesn't come in here and throw the entire feast at a dice roll. $200. That's why we know better. Take the float failure trade. It's not as clean when irrational. See, but we are irrational. So trade very small just to keep yourself from, you know, taking a lot of the wrong. $200 not gonna make me cry. Okay. But yeah, so in 2010, that was me. I'm like, let me get into trading. So you guys in the COVID era, let me get into trading. Google the word day trading. YouTube pops up. There is an infinite amount of resources on trading. That's kind of the problem now, is that you spend a lot of your time sifting through stuff that looks viable. Now, here's the thing. In my day, I also sifted through a lot of stuff to see if it's viable, except it's in books. And let me tell you, 99.9999% of all the books that I picked up were useless. Well, I didn't pick up that many books, but I'm sure the books in the library are also useless. You can't teach day trading in a book. And even if you could, the technique would immediately become obsolete within a couple of years as the paradigm of how markets work changes. And the markets are evolving constantly and technology is changing. Now, these days, it's the same thing, but instead of books, it's like YouTubers and TikTokers and Instagrammers and Twitters and whatever. It's the same thing though. You're just going through stuff and it's like the majority of things are written on techniques that were created in like the 70s and 80s. A lot of your technical analysis was created in the 70s and 80s. The RSI and things like that. Your basic premise for technical analysis came out in the 70s. Which, if it's so hard to say, this was 50 years ago. So it's kind of like saying in like 1950, your understanding of what electricity was like it was in 1900s. A lot has evolved in a 50-year period. So it doesn't mean it's not as good or not useless, or sorry, it's not to say that it's useless or it's not as good or anything. It just means that the application has changed. Just like the eighth of a dollar to the quarter to the penny spread, something has changed. And so, and if you want to know specifically what the application has changed of technical analysis, is that, you know, maybe a long time ago when market making was done with humans probably did charting, and humans probably looked at the charts and they probably went to the floor and they did, you know, I want to buy 10, I want to sell 10, I want to sell 5, I want to buy 3, you know, like, you know, doing the whole song and dance. they probably were armed with charts to make their decisions on where they would buy and sell, and they would get whispered in their ear or get phone calls, you know, from their quants back home or their traders back home to say, hey, we're checking out the charts. Liquidity is this way. Market's a downside. So you might have used charts as the basis, and so therefore the indicators are very strong because not a lot of people use them. And these days, I have to tell you, nobody uses charting anymore ever except for retail traders and maybe some fund traders. Like the computers that run the market, liquidity providers, market makers, zero of them base any of their decisions on charts and what charts are showing you. So the techniques you use as a retail trader are not mirroring what the actual institutions are doing. They all use quantitative algorithms, liquidity measuring algorithms, order flow algorithms. They're looking at real-time order flow. The technology is there for them to do so. EVXY greater than A bucks. So the question becomes, the application has changed. Are they still, can you still use them? Well, absolutely, you can still use them. So watch out for hedge pressure break, you guys. Thank you for letting me know that. It's just like the question is, a Fibonacci retracement is good when everyone else is using the same thing. It's a self-fulfilling thing. There's nothing magic about the Fibonacci numbers. Markets move up and they retrace a certain ratio. You know, in the Renaissance, that would be considered a beautiful thing, and the Fibonacci numbers were in all the artwork and such. But as far as any magic property in day trading, it really didn't. You could probably have built a case for, in another universe, somebody created some other random numbers and said, we're going to retrace here. And then as people start to pick up on the pattern, they start to trade there as well, which enforces the pattern to make it stronger. So it's a self-fulfilling thing. It creates itself because people are trading there. There's nothing magic to it underlying the hood. People are trading there, which makes it pivot. Well, hedge pressure, people are trading there, which is what makes it pivot. People are trading there. We know they're trading there because that's the balance of the risk in the options world. So because you can guess people are trading there, you bet people are trading there. And that is the philosophy of any indicator, is can this indicator still guess if people are trading there or not? Fibonacci numbers, no offense, they're absolutely garbage. They probably worked a long time ago, so people were using them when they did do charting, but now all the computers that are trading are not looking at it whatsoever. So because there's not a lot of people trading there, you can put your Fib 23.6 or whatever all the numbers are and monitor them. And each time you have a move of X amount, which one do you retrace to? You'll notice that there's no distribution of a majority other than half. The halfway point is always that kind of like spot, but it has nothing to do with Fibonacci numbers. It's just whenever you're doing a binary search between two spots, you always move the half as the next step. So market goes up, it sells, market finds buyers, it comes up. Sellers and buyers, where do they usually meet? Well, usually in the middle, and there's some magic to the middle, which is the general mechanism of finding liquidity. So markets like to converge to a middle, yes, but do they converge at like 23 point whatever Fibonacci numbers? They really don't. So some indicators were self-fulfilling and they worked because people made them work. They didn't work because there's some native magic to the market. Like in Venus and Mercury align at the same time, there's a sunspot and you see a unicorn flying across the sky with rainbows coming out of its ass, and all of a sudden you're going to long the market. Yeah, it's really not the best approach. So understanding is how the application has changed. Technical analysis application has changed. People still use it. Retail traders still use it very heavily. But retail traders don't create the driving force for the market anymore. The market is all based on market making and computer-based risk management algorithms, risk-based, minimizers for people providing liquidity. Typically, it's what moves markets. The sum of least risk of all participants drives the market. So the people that are trading the most drive the market, which is typically the premise of technical analysis. I'm going to buy at this level because everyone's trading here. Well, where is everyone trading right now? Everyone, and the majority of all trades are bank-to-bank transactions, like funds trading against funds. So, and most of these are all liquidity providers to begin with. So like the majority of all volume and order flows can be liquidity providers constantly trading the market to balance their risk. And then, human decisions, speculative decisions, they pepper in throughout the day, but the majority of all order flows can be that dealer middle ground who aren't using charts. So now what you have to say is, which of my indicators are still viable and when are they viable? Instead of using them as all the time, like every single time I hit this fib level, I'm going to buy. That's where I say is useless. But what is useful is narrowing the box of when you apply that indicator. There can't be times when that indicator is very powerful because it still has a repeatability with some kind of other conditions. And so now the conditions have to kind of like overlap and you create like super conditions. Our alerts box or super conditions. When all of these alerts line up, we realize that this is very much more predictable than when they don't. So it's kind of like when you can draw your box around when to use the indicator. That's the secret of retail. Finding when they work and when they don't, and knowing the conditions they work on. So using an indicator at all times with no conditions, like if you're like RSI 70 and RSI 30, buy, sell. Then you need more conditions, comma, if VIX is doing this, comma, if stock is doing that, comma, if this is doing that, no news, no whatever. You have to come up with conditions at which those indicators are applied. So that's kind of what everybody has to do in the modern day, is to take your indicators from the 1970s and find out when to apply them. Not just here's a signal, there's a signal, here's a signal, there's a signal. But instead, it's like, okay, these things don't line up. We're not using the indicator right now. So right now, these things aren't lining up. We're not going to use resilience as strong as we would normally do it. Resilience is likely not going to be a leading indicator. When these things are all green and yellow, resilience is a leading indicator. So we apply our tools differently. Do we understand that? The best thing to learn from books would be the psychology of trading and journaling. I'd say the best thing that anybody can learn from books is the ability to be patient while reading a book. I think reading books in general, and in any light, I read a lot of books. In my childhood, I read a lot of books. One of my favorite books I read, like when I was young, I was a very like advanced reader, and so was my son, by the way. In kindergarten, and you know, I'm kind of already like progressing in math, but I was reading, like I had Great Expectations, Charles Dickens. I had Count of Monte Cristo. Those are my two. I read those books over and over and over again, like, you know, 6, 7 years old. And I loved reading, and ever since then I read like every classic lit book that's ever come out. I feel like I would join those like book clubs at the library, and I'd read the entire list and get the free pizza. So reading is great. Reading anything is great for your soul. I'll tell you that. Reading a trading book, learning how to be patient to dig through somebody's psychosis as a trader is definitely a skill set you learn. Like I always say, like the joke is like, what do you gain out of reading trading books? Is like, well, you learn how to be patient through noise, because a lot of it's noise, and that's like a trading skill. But I would say that like reading people's experiences is really the good takeaway from trading books. There's not going to be a good instructional trading book that's going to help you with the market other than you sitting down with a mentor and them walking you through trading itself and you experiencing, you know, the firefight. It's like the idea is that you can read about, you know, pick your dangerous sport. You know, you're a bullfighter or something, like, or you're like a mountain climber, something that like, if you do your sport wrong, it kills you, right? Yeah, you could read about in a book and learn all about the things and whatever, but the minute you go out there and actually do it, you don't know if your hands are going to be shaking while you're trying to like hold on to the rocks, or you're going to have that steady grip that you need, right? You're never going to know if by reading in a textbook, you can know everything about anatomy of human body, and then you can go be a surgeon and you can't even hold a scalpel straight. There's application becomes the biggest hurdle of a trader, is how you apply your job under pressure. Even if you're the best trained trader on the planet, you may not have that mental fortitude to last in this game. You may not have that cool, calm confidence to stay collected because you know where your risk zones are and you know exactly what you're going to lose. So like the only way to learn trading is unfortunately by trading. Like same as poker. You can learn all the odds, learn all the stats, and know when to bet. But once you get there where there's other people and random variables, how do you behave once your money's on the line? How do you behave after 3 or 4 losses or kicks in the stomach? How do you behave after a windfall trade? Are your emotions swayed? Are you very greedy? Does your risk models change? Like, are you sturdy under all environments? You know, that's like a whole part of. And I'll tell you, the best books to read in trading, and I tell people all the time, are books unrelated to trading. Like you can read any book that helps you think better, like a different person. What I like to read that helps me be a better trader in general is any book that I can learn something from some genius who did something. Doesn't matter what it is. I like to get inspired by people who think outside the box and kind of what they do. I've read all kinds of different books by different people that have come up with different ideas, not even related to trading, that have helped me with trading more than any trading book probably ever would. Like learning about somebody's thought process of geniusness. It does something completely outlandish. How they fight against, you know, the status quo and do something different. It's kind of like what you're doing as a trader. You're trying to find opportunities as a lone shark. Not a lone shark like LOAN, but a lone, like a lone ranger. You're a lone creature in a sea of, you know, status quo. How do you navigate through this and come up with something no one else sees, right? That's where I like to read stuff. So trading books, you guys have some. Count of Monte Cristo is your favorite book, Chase? Oh, dude, I love it. It's got everything a book needs. Love story, betrayal, revenge, pirates. How can you not like that book? It's amazing. Barbara's gonna mention trading for the free pizza. Yeah, you like, or you remember like Book It with Pizza Hut? In Book It, you would like read. You would read like 5 books, and Pizza Hut would give you like that the big China pen you would wear it here. You put 5 stars. Once you got 5 stars, you get your free personal pan pizza at Pizza Hut. Oh man, I did all the time. All right, I was inspired you to learn French. Oh really? It was such a good book. That's like why I probably still love Pirates to this day. Like my whole motif in my house is like, you might walk in and think it's kind of morbid, but it's not. Like I have skulls everywhere. It's like a thing. Just reminds me of like probably my former life as a pirate. I have a coffee cup with skulls on it. I've got a bracelet with skulls on it, as you can see right here. You see right here? Each of those things are those 2 little metal things. These are skulls. Here, skull, and the eyes are actually diamonds, black diamonds. So each of the skull's eyeballs are black diamonds, which is like my little thing there. See, if you give me like a gift with like pirate looking stuff or skulls on it, I'm always a big fan of that. Because I think in a former life I might have been a pirate. Rocket Beard was my name. Confessions of Street Act. I don't think I've ever read that. What really helps you as a trader is learning how to think critically under pressure. How to solve problems under pressure. How to deal with curveballs under pressure. How to maintain your mental fortitude, which means is like, how do you know if repeated mistakes makes your entire strategy unwind and your confidence unwind? But people like used to call me Iceman. That was like my nickname, I think, during the last trading challenge I did on, last big one I did on YouTube. Like the 20 days. And they would say, they would like call me Iceman because I never seemed to be like phased or shocked. You never saw in my eyes that I looked nervous when I was trading. I always seemed to have a sense of control, like understood what was going on. Even when the market was random, I still understood at least where I wanted to be in the market, where I'm going to cut, where I'm going to run. And I never kind of faltered on that. I always knew what I wanted to do. Even if I knew the market's random, like right now the market's random, so I'm trading small. I always seem to have a sense of control of myself inside the environment. The environment went against me. I never freaked out and like started making stupid mistakes on top of stupid mistakes. It always, you guys could probably been here long enough. Marie's been here long enough. People used to say that, Matt, you always seem like you're never fazed by anything. And I think you guys will notice that it's really just me knowing how I behave in every environment. Nothing surprises me anymore in this market. But it doesn't mean I know what I'm doing every single minute of every single part of the day as far as predicting the market direction. I know what I'm doing every single moment, every single part of the day based on where I want to be and not be and how much I want to be in. And if I'm going to double down, if I'm going to get out. I never lose my sight on that. Because I'm so rehearsed in like my own risk management. I know where I just know instinctively where I'm in like this area. Okay, I need to get out, or I need to get, like, I know because I'm so rehearsed in my strategy, right? And I think like as you trade, your goal is to be in that same spot. Like your biggest achievement as a trader is to know what to do in all situations. The market's random most of the time, predictable in other times. And you got to figure out your first layer of your strategies. When is it predictable? When it's not? What are the conditions that it's predictable in? That might take half a decade for you to kind of isolate your own strategy, or you might learn mine and apply it yourself, and by a couple months get really acclimated there. And the second step is, how do I behave inside of the strategy that I have? How much am I comfortable losing? How much am I comfortable winning? Like, where's all my comfort levels here? And that feeling is what you're doing, spending a lifetime carving out. It might take you like another 5 years to really become an expert at feeling out the market. And it might take your entire lifetime to chisel out the last 5% of that. You might get 95% there in half a decade. And then every year goes by, 1% is a huge up for your style. And you may just, spend your entire life getting that last 5% of comfort in the market. So reality, your skill set is trying to learn how to behave in an environment like this. Your first half of your decade is learning the environment and learning how trading works in the environment. The latter half is, how do you behave in that environment? And also when that environment changes, as technology changes, how do you dynamically evolve as well? How would you behave if for 10 years of your life Fibonacci numbers worked, and then over a period of 5 years they slowly became obsolete? Would you be able to recognize that? Would you be able to adapt? It's not like you wake up one day and they no longer work. It's like they work and then they don't work, and then they work and they don't work, and you have all this noisy data. But then you look and say, oh man, 5 years ago I made so much money every year, and these days I don't make a lot. And you go, oh, that's the realization. This thing doesn't work anymore. It's not working as good. But when do you have that cut and dry feeling of, oh wow, this is obsolete? You don't. So you have to kind of stay progressive as well and understand that what you're doing no longer works faster than years of using it. Like if an example is, if we hit hedge pressure and there were no more volume spikes, we would know very quickly that hedge pressure was wrong, or it just didn't work anymore. Like you have a gauge of when is my technique wrong? What is my metric of understanding that my strategy's broken? And can I create new conditions for it to fix it? So you're constantly, like as a trader, you're going to be trying to create methods to fight your methods becoming obsolete. As things become better and more sophisticated, so must you. And those are the things you spend your lifetime doing. Get a good mentor whose job is to constantly evolve, because the market is doing that. And then you can evolve with them and learn with them and create your own tools alongside them. Monte Cristo, still getting signals from the universe to finally read it. You have to read it. It's like the perfect book. And I would say that it's like, if you like things like Lord of the Rings, any high fantasy, or you like Harry Potter, any adventure books, anything like that, it's like the perfect book for people that like any of that kind of stuff. It's just such a cool story. It's adventurous. The golden years for Pizza Hut never reached the same heights. When you actually would go into Pizza Hut and dine in at a Pizza Hut, and usually had like arcade games and pinball and a jukebox. Oh yeah, those are the days. So I've gained the most from trading books by reading books on, geniuses doing genius things, or books on like things that spark my creativity and make me think outside the box too. I even remember again, this is kind of controversial to say this, but let me show you this book right here. Hold on. Let me find it really quick. Like I read like anything and everything that people write as much as I can. So like the anti-tech revolution and technological slavery, the two books written by Ted Kaczynski, the Unabomber, not at all condoning his actions. He was a terrorist. This guy was horrible person. But he also was like a very, very, very intelligent, like high IQ person, right? And so even his ideas were weird and sociopathic and like psychopathic and outside the box, but his ideas were actually very interesting. And so like the idea is that books like that help you think about, okay, what does the world perceive and what does this weird outlier perceive inside of this world? Figured Outlier, another one of my favorite books, Malcolm Gladwell. Books like that really help you just open your mind to other ideas. As a trader, you get stuck in like this one pattern. How do you dislodge yourself from like a pattern? So find some creative genius and, you know, how do they see the world differently? Because you want to apply trading is like, how do I see this differently than anyone else does, right? And his whole thing was like how technology is going to separate humans and destroy our social culture, and it's terrible for us. And I remember going to concerts in the 90s, and people would like go to the concerts and get a mosh pit and like beat each other up, and it was so much fun. And these days you do a concert and everybody's like this. And it's so weird. You go to a concert, this magnificent thing, and you're watching it through a tiny screen in front of your face. Let me watch this amazing thing that I bought a $100 ticket for on this little screen on my phone, but I could sit on my couch and watch the person who saw it last week on a little screen on my phone on YouTube. Why would I pay money to stare at my phone and watch a concert? You know what I mean? So it's like, technology has made us all stupid in that regard. And the premise of the book was like, technology is going to ruin our social culture and things like that. And it almost was exactly right. And it's just interesting to see how people perceive the world. Now, again, not condoning Homeboy's actions. He's a terrible human being. But I like to read what people see that's different than what is. And anybody's thoughts on any part of the world and how it behaves. And like, that's why I like to see creative, innovative ways that spark my creativity. And that makes me a better trader, because I start to approach, anytime I read a book that makes me, oh my God, this is profound and cool, I always come back and say, okay, you know, I always feel refreshed in the market. I feel like dislodged from things like that. Starting House of Morgan. What is House of Morgan? Let me Google that. And trust me, you'll think that technology ruins society anytime you open up TikTok. American Banking Dynasty and Rise of Modern Finance is a nonfiction book by Ron. History of 4 Generations, JP Morgan, Financial Empire. Ooh, I'm into that. Real time. That sounds like a cool book. Count me in for some of that. There's that red line tap. What do I want to do from here? Nothing maps is still bullish. ED is still bullish. Do I care to do anything from here? 90 bucks. Man. Oh well. Pizza Hut had a Galaga arcade machine. So many quarters lost. Hey, we had a Galaga machine too. I wonder if Pizza Hut just had, was it Midway who licensed all those games? May have like a contract with Midway. I think like every Pizza Hut had Galaga in it. Or Rampage. I remember playing Rampage. You guys remember that game? Where you were like the giant dinosaur and the giant King Kong, and you would like climb up the buildings and like punch the windows and eat the people. UVXY Rejection, Hedge Pressure, Galaga, the best game of all time. Galaga was fun. But as far as like trading books go, I can promise you guys one thing. There's not going to be a trading book that you're going to read ever, ever, that will change your trading behavior or change your trading. Like you'll read this book and you'll wake up the next day trading differently. You're going to always have to apply what you learn in a book. Which may say take some time. So anytime you learn something new, even application and trading, like always practice it before you go into it. Like don't wake up the next day and start immediately radicalizing something like in your strategy because you are radically changing something because you learned something in a book. Practice before you apply, and again, get used to like changing your technique, and then also changing your behaviors around the technique is always a slow process. So you're never going to wake up the next day like a different trader. You might wake up the next day with a different path, but always approach that path like you would any new hobby, new sport, new whatever. You have to practice and practice applying it to get better. Rampage, King Kong, and Godzilla. Yeah, that was like the game, right? Telling somebody about the other day about how you used to have an Atari at home when you were little. Frogger and Strawberry Shortcake and Pong. Dude, the Ataris. Our first video game system was Nintendo. My uncle had an Atari and Intellivision. We played on when we went to his house. And they played Pitfall and Frogger, Galaga, Asteroids. So we took the float failure, or we took the float rejection trade to bet on some return to there. Here's how great our DD bands are. Again, you turn Rocket Scooter, you'll learn about what DD bands are. They're always really solid pivots. You get careful right around here. We overshot pivots because why? Everybody above triple B, so overshooting pivots is okay. I'm not scared because it's breaking a little bit. I'm on alert, but still okay, ready to trade. Right, we know that when VIX is above triple B, which it is right here, we expect the market to overshoot pivots just a little bit, just a little bit, just a little bit at times. And now you see that that's how we trade. Looks like we're popping a little bit. There's my red line. I'm taking 56 if I can get it. My bull and bear zone is actually right here. Let me make sure I draw this in the right spot. I actually move this around. Like that. So this was all in the middle. Okay, good. That's how. I know I'm different than most people, and I know a lot of trading educators and such will always promise you this is a great book, that's a great book, that's a great book. I'm like the one person that never had that list of good books that help people in trading, because I personally just know the skill set of trading can't be learned in a book. And that's kind of why I don't tell people like, here's what I want you to do first, is to go read all these books, or this will help you. Reading books should be like what you do before you go to bed, not when you're like actively practicing or trying to get better at trading. The only way to get better at trading is to practice trading. These days you have so many opportunities to do so. These trader funding programs are the way to do it. Pay whatever, 50 bucks a month, 100 bucks a month for a fake trading account that might give you money if you start winning. How easy it is to practice in a world like that, where there's real risk, 50, 100 bucks a month, and real reward. Money if you make it. Very inexpensive. You're not out there having to cough up 5, 10, 20 grand for a trading account to actually just practice trading. It's not purely paper trading where there's no risk on the table, where you're just being frivolous. Every time you blow up on those trader funding programs, you pay your 75 or whatever, 100 bucks to reset it. So there's a penalty for failure as a reward for success. The basic premise of psychological trading is risk and reward. So what environment like that where you can practice trade with real risk and real reward, and in a controlled environment with no account minimums and no all that other stuff they require in real trading, and then you can start just playing around with whatever you can until something sticks at the cost of, like I said, $100 a month. Not a terrible world to live in these days. I'm almost glad I started learning trading in 2010 when all this stuff wasn't available. Like, I learned the hard way, but that forced me to create things. These days, I think it'd be much easier to ramp up as a trader. You just have more noise to sift through. But the opportunities are there for you to get a good environment to trade and play in. So trader funding program is like this intermediate step to the real game with actual risk, actual reward. It's like paper trading on steroids, which is kind of nice. Paper trading with real risk and real reward, kind of. All right. The feel of this right now is it is trying to go up. Volatility is trying to collapse. It's trying to go up, and it's trying to retrace and lose, or retrace that loss we had from this morning. I think I'm going to hang on to it. Oh, cool. Oops, copy. Oops, what? That's not what I want to do. New. There we go. Somebody's asking a question about that. Why don't you? It's a good question. Somebody says, why don't you? What do you say? I need help setting my workspace. Why don't you guys have Matt set up as a default so that we can just load that to get started? Great question. I'll just address that here. Why don't we load up my setup like this to get started? So essentially, the only thing that makes my setup different than your setup is I just put two versions of the charts to the side. So like this is the platform that you see when you start Rocket Scooter. And then you can click this little button right up here to pop out a second version of the chart and a third version, etc. And I did that and I just moved them on the screen. So why is this not the default setup for everyone else? A couple of things. Great question. Number one is this is my setup for streaming. Like with my beautiful face, hold on, which always reach back left side, right side, up, down, twirl around. Okay, this way. This way. Right here. Okay, this way. See that side of the screen where my beautiful face is? Debatable. Beautiful. Right here. Like this here, and those things there, and those things there have to do with like me being able to get as much information on one screen as possible for the sake of streaming. You might not, like in an ideal world, you'll have this full screen on another screen, this full screen on another screen, like big, so you can actually see it and play with it. People may have multiple screens, people may have one screen. Because everybody's trading setup is different. We don't like force a style setup. We just force nothing and let you decide. Great question. So a lot of people are like, Matt, how do you get your stuff on the same screen you do? Unless you're streaming, you don't want to cram everything onto one screen. Unless you like that. Like this is small and good. You might want to put like a bunch, maybe you do. Maybe you want to put 6 little screens or 10 little screens. However you feel like it works for you for your own visibility. You know, if you have like 6 monitors, you might want this on its own, this on its own, and make it a little bit easier. But great question. Great question. The only reason this is like here is not because it's advantageous to the platform, but it makes it easy for me to have all my details in front of you guys so that when I'm streaming, I have minimal like fiddling around with the mouse to go to like this camera, this screen, that screen. I can just go right here. I can draw where I want to draw. Then I can just move my mouse here and everything's going around. That way I'm not like fumbling around with the screens as well. And my encoder, which is like switching scenes. Like the encoder is the thing that does this. And that. And that. So I'll be like flipping through screens to try to like move to one screen. The other, I've got, let's see, 1, 2, 3, 4, 5, 6. My camera has a screen on it. 7, that's a screen. 8. I have 8 screens here, right? Then, you know, it's like half of them are actually doing work to run the business, develop the platform, develop marketplace. The other half is doing trading. The other half is controlling the stream. It's just like, that's 3 halves apparently. I just do this for like simplicity, for like myself for the stream. It works better for me. I think this particular trade, I'm committed to an all or nothing. My particular target would be we get back to mean reversion, maybe back to hedge pressure. I'm in no hurry to take profits or scalp this. I'm trying to bet that this repairs itself based on the greater bull market. So if we break DD band, I'll walk away with like with a little bit of a loss. I wish my entry was slightly better. I'm going to get 20, 30 points if I can. I want to see this fight its way to the top. But we'll see. Time to go though. I love you guys. It's well past our cutoff time. So let's go ahead and cut it. I'll let you know how it turns out. Friends, thank you for joining the Rock Scooter family. We love you all. New data feeds should be coming out fairly soon. We thought today, maybe tonight, maybe tomorrow. Just remember, we're gonna have a whole training session on it the day of. So we'll announce, hey, there's a trading session. So maybe tomorrow, since I didn't announce it today. But we'll get everyone together, teach you how to get in. We'll do it after market. Pretty simple. Improved data feeds, better candles, all these other things will finally be launched live to y'all. Super excited. Marketplace beta should have functionality by the 7th. So we'll be able to have a few vendors already listing products and things like that, ready to play with. I mean, huge things are happening to us guys here. And we're so excited. I mean, like so excited. And thanks for seeing me partying in the family. We will see you later, 4 p.m. for a Zoom call, as we always do. Come today, we'll talk about DD float failure. That'll be today's trading topic. All right, talk to you.